So tomorrow's going to prove to be an important day in the market. The SPY has set up with a unique candle at the top of this recent move that isn't, unfortunately, I hate to tell you, it's not too bullish. It's actually kind of a bearish candle. And the last two times that we got this exact same candle was the beginning of a significant downturn. Now, what are the catalysts that we're looking at tomorrow, which might initiate that move? Well, we're going to get the PCE report. The data could be interpreted as bad data is good data. Well, then the market might decide to run. There are some very interesting things going on with money flow surrounding the SPY that I'm going to share with you today. And I don't think that they perfectly tell us what to expect for tomorrow, but they do tell us what the most important technical line on the SPY that we have to cross to confirm the up move. There is a call wall above us right now. The call wall, 685 strike, has the largest concentration of SPY calls. This is $1.7 billion essentially. Dealers are likely to short a lot of those calls. When price approaches 685 from below, dealers hedge to keep risk flat. That flow often pins price directly beneath that call wall and creates a potential area of rejection. Now, in a video I did about a week ago when we were not where we're at now in price on the SPY, I said that for the market to truly go back to being on a hot bull trend, we had to close a daily candle above 685. And I gave that to you when we were significantly lower. And lo and behold, the call wall is right there at 685. And so tomorrow is going to be a big day. We're going to be watching that PCE, which comes in 8:30 a.m. before the market opens at 9:30 a.m. Eastern time. I'm going to take you into the SPY and show you those ominous candles, and we're going to do a checkup on Meta right now because this has been a stock that's had an incredible move. From the lows, this was my number one position. Now, largely, I got out of it yesterday, and today we did push above my trigger price. I couldn't catch it because it did it all pre-market. We shot all the way up to the 200-day moving average, and we hit rejection, and we've been fading from there. I'm going to take you into that chart and show you what's important to me now and what I'm going to be watching for there and how we might be able to confirm whether this entire market has created a bear trap and we're actually going to squeeze up to 700. Don't be surprised if that happens. It absolutely could happen. But tomorrow is going to be the pivotal day, I think, that will determine that direction as we go into the next couple weeks. Right now, I actually am still leaning towards believing that there's more risk being a bull right now, but it's been paying to take risk positions to the upside, Meta in particular. Let me know in the comments if you made that Meta money. Welcome to Wall Street. This is the Stocks with Josh show. Didn't plan on doing a video tonight, but needed to get some of this data out to you guys because I thought it was pretty important, and tomorrow's going to be pretty volatile. Hit that like and hit that subscribe if you need to better understand the charts and understand what that money flow on Wall Street typically means. Thank you for joining me. Thank you for watching the video. In the Stocks with Josh Discord, one of my pro traders led a live trade session this afternoon in the Power Hour. We're talking about Mark with Tribal Trades, and they were able to successfully catch that $5 up move on Tesla right going into the close. An incredible move. So I wanted to congratulate him and anybody who took Tesla to the upside. And if you don't know what I'm talking about my pro trading community. We've got 10 live trading sessions every week. 5 teaching sessions every week. Go to the website, www.stockswithjosh.com, and check it out. All right, let's talk a little bit more about money flow on the SPY right now, because there was also another event that happened in the Darkpool on the SPY that, unless you're watching money flow, you don't hear about. This is the amount of transactions that occurred at $683.67. There was $1.1 billion transacted exactly at that price point. And how do we interpret this? Well, it could be bullish or bearish, but what it specifically does, it creates a line in the sand at that important price point. It makes that price point the most important price point on the SPY chart, because it could, if we get heavily rejected underneath that in the coming days, well, then we know that this transactional event that occurred on the Darkpool was bearish. But if price squeezes above it, we now have a support base of $1.1 billion worth of transaction at that price, and it could become support for a much bigger move up. Now, I know some folks will be, Josh, what's your prediction? I don't make predictions. I'm sharing with you guys the technicals, how I read those charts and the important news stories and the important things you need to be paying attention to. And here's the most important thing I want you guys to understand is that this transactional event on the dark pool made $683 on the SPY. Super important because, as I said, if we break beneath it, it could now become a wall above us. Now, this dark pool transaction that occurred at 683 is different than the call wall that exists at 685. This area is setting up to either become a very important base and price is going to squeeze through it and surprise the bears, or it's going to reject against it hard. And we're going to be watching tomorrow to see if that PCE is the event or the excuse that the market uses to begin a sell-off. Now, overall, I've been saying this, that I believe that the AI rally is 100% intact and it's going to continue in 2026. The big question is, does Wall Street want to buy at these levels, or do they want to pull the price back and get a more attractive entry? Let me know what you guys think about that. Now, one more interesting money flow dynamic on the SPY today was that there was a late order of $1.2 million in call options. It was a sweep for the $700 strike level. So somebody came in today right at the close and put down $1.2 million buying a selection of options. That's what a sweep is. They basically buy all of the open interest that they can get their hands on. And it wasn't for an expiration for tomorrow. It actually expires next month. So they're 30 days out and at a much higher price. So it's not enough for all of us to turn around and go all in on the market, but it is a signal that somebody thinks the market's getting ready to move and possibly move higher. What do you think of that play? Was that crazy, or is this market getting ready to squeeze through those levels I just gave you, 683 and 685, and move on to 700? Well, it's going to come down to the catalyst tomorrow, the PCE. Let's jump into the SPY. I want you guys to see some ominous candles that we're going to have to get the market's reaction to tomorrow in the morning and see whether or not this is going to be that rollover moment. Let's go look at those candles. All right, these three candles are sometimes referred to as hammer candles, but more technically, the accurate term for them are hanging mans. And each one preceded a pretty strong drop. Actually, after that candle printed on the daily time frame, the very next candle gapped down. Here we got another print, and it gapped down and gave us this huge sell-off in November. We know that we came up on lower volume. And here we've printed this candle again. All three of these are roughly around this $685 level. And so if we gap down tomorrow, I don't think that it's going to be a buy the dip opportunity. I believe it would be very similar to these two other sell-offs. And that brings us to another structural pattern, candle pattern that I see on the charts. And that's actually a potentially bullish pattern. And that's this inverse head and shoulders. The idea is that we would come back, make the right shoulder, possibly bounce off this 50-day EMA. That's the red line that you're seeing on the chart. And that would set us up very nicely going into 2026 for a continuation move higher. This would be the third time, though, that we have attempted to get above 685. And it'll be very interesting tomorrow to see if we've got the juice to do it or whether or not this becomes a major wall. So Meta, let's talk about Meta because they came up today. They've moved very quickly, but they just as quickly got rejected at the 200-day moving average. And I'm going to tell you what we need to see very quickly for this move to get stabilized and continue higher, or whether or not this is also a reversal point for Meta. But why did it have that move up? Well, first of all, I hated this move up on Meta because it occurred before the market even opened. And you really can't get into those options and load up and take advantage of that move when the market's closed. And of course, the minute we shot up, as soon as we hit that 200-day moving average, it worked as a point of rejection and we sold off throughout the day. But what caused the move to go up? Mark Zuckerberg's spending habits, specifically a leak from Bloomberg that suggested that Meta plans up to a 30% budget cut for its metaverse division, Reality Labs Horizon Quest, starting with the 2026 budget. And so that was the news that caused the stock to pump, that he is going to slow down on his spending on the metaverse, and that enables him to allocate more money to what the market believes to be successful, which is AI. Let's take a look at the stock and see what it has to do for this up move to continue. Okay, we talked many times about 648 being the trigger for the move up, but this one was not one that you really could catch because it gapped up before the market opened and it hit that 200-day moving average. And this is pretty important because we've talked about this before. This is the 200-day moving average on the daily time frame. And anytime Meta has gotten below the 200-day moving average, it's been a good decision to buy Meta long terms. We had this huge sell-off over the course of a week. We came back, tested the 200, and it proved to be a place of rejection, sold off, made a double bottom, made a W shape. And then here's what I want you guys to be paying attention to today, because this is what Meta needs to do to prove to us that it's ready for that next leg higher. Right now, it kind of more resembles this previous time when it rejected the first time off the 200 and had to go down and make another low before going up higher for the coming years. It needs to get above. It needs to open and close a candle above, and it needs to then consolidate above. And if we get something like that, then it opens up the opportunity for these much larger moves and possibly a brand new all-time high. So let's look at the chart that we've got right now on Meta. Back here, we had this W pattern, break of the 200, resistance at the 200, and then a move above the 200. So far, we had the break of the 200. We now have hit resistance. And unlike this previous time where we consolidated above 200, it's far more similar to the time that 200 was a rejection point. The only way that Meta is moving on to break a brand new all-time high is if it can get back above this 670, and it needs to close not one, but two daily candles above the 200-day moving average and above 670. And then I will believe that Meta is not going to spend much more time beneath its 200-day moving average, and it's ready to begin to move up right now. So far, we hit the 200-day moving average, and we rejected. So it's not that complicated. Tomorrow, the PCE at 8:30 a.m., Meta, it's got to get back above 670. We need two candles to confirm that the down move is over, and we don't have that right now. The SPY has got a hanging man candle or a hammer candle, and every time we have printed one of those on the daily time frame, it's led to a sell-off. We got those call wall. We got $1.1 billion worth of Darkpool transactions between 683 and 685. Now, here's specifically what I'm going to be watching for tomorrow. I'm going to be watching for an attempt to push through those walls and get all the way up to 688 to get everybody stoked up and excited about going all in again, only for that to turn out to be a bull trap. Now, we've got to get above that 685 and do the same thing that we're doing with Meta. We got to close two daily candles, because if we get up to 688 and we wick hard back below 683, that seems like a pretty strong setup for a coming bearish move over the next 2 weeks. Let me know what you guys think. Leave a heart and a comment for me. Like and subscribe. I'll see you in the next video. Take care. If you need better trading tools, check out the offer right now from the Moomoo Investment app. They're running a limited time promo. You can get up to $1,000 in NVDA stock just for making a deposit. Plus, they're offering 8.1% APY on your uninvested cash for the first 3 months. So your money's working even when you're not trading. I'm a big fan of their earnings calendar, and when a company reports, you can just tap the earnings tab for a clean breakdown of revenue, earnings per share, and company news all in one place. Also, there are 0 commissions on US stocks, ETFs, and options, and no inactivity fees. Whether you trade every day or just check in once a week, you're not getting hit with hidden charges. You get level 2 market data with over 60 indicators, so you have the tools you need. Go to the Moomoo link below to grab your free stock and earn 8% on your sitting cash.